Perfect. Well, welcome. My name is Trevor Miller from Cherry Hill Private Wealth. Today, I have with me Tania Labonte from Verico Designer Mortgages. Really excited to have you on, especially after the Bank of Canada decided to hold its rates for the third time. You must be excited about hearing that as well. Maybe make your job a little bit easier going
Yeah,
forward.
it's positive. It's
Yeah,
positive.
good.
It
Good.
could have come sooner, but we'll take it.
Well, it is funny. I was reading an article yesterday, and they were saying that they're probably overshot this interest rate rise by 25 to 50 basis points. So,
I agree
yeah,
with that.
it could have probably come sooner. We're seeing some really interesting economic news on our side as well, just based on the rates and GDP's down. I mean, there's a lot of stuff going on. But today, I'd like to kind of hear a little bit more about what's going on in your world. What you're seeing, how this affects you and your clients, and that sort of thing. So, what are you thinking that they're going to start unwinding these interest rates quicker now than initially anticipated because of how much they overshot it, or do you think they're still going to hold course going forward?
Yeah, Bank of Canada doesn't is not giving any indication that they're going to drop it sooner. They still have that tone that if the numbers or if inflation numbers or unemployment numbers are not going in the right direction, they can still raise rates. So they're still delivering that tone. But from what I see on my end, firsthand, discussions with clients, reviewing applications, credit bureaus. I mean, I think we're in a really bad position right now, and I believe they should be lowering them much sooner. Even if they lower them, or even if they did lower them this past meeting on Wednesday, when there was no indication that they were going to, I feel it's too late. A lot of damage has been done already. So no matter how soon they lower it now, these people who are tapped out on their credit cards, they're not going to go out spending.
Yeah.
So I believe there's been a lot of damage, and the rates should be coming down sooner than they're leading us to believe. I predict maybe the first quarter of 2024, they should drop them.
Yeah, I hope so. I want to kind of focus on something you just said there, with the credit bureau scores and all of that. I put out a newsletter that went out this morning, and I was talking a little bit about not necessarily the credit bureau side, but more on the overall savings that Canadians had, and it went from 1.65 billion in accessible savings throughout the pandemic, start raising
Yeah.
the interest rates. The number that CIBC put out just this week was that the savings amount collectively for Canada is now down to zero. So it sounds like a lot of what you're seeing as well. So just kind of going to what you're actually seeing. What kind of credit bureau scores are, and is this coming from people that typically had better credit scores before and are now just maxed out and those scores are dropping, or is this a certain type of person, or is this just like across the board?
Yeah, I feel like it's affected a lot of people. So as rates at the longer Bank of Canada, sorry, the longer Bank of Canada holds rates, it just squeezes people more and more. So everybody, like a lot of people, were able to generate savings, right?
Yeah.
The rate stayed high for long. The Bank of Canada raised it a couple more times during the summer. So what happens is these savings deplete. And once they're depleted, they turn to their credit cards, lines of credits, to keep them afloat.
Right.
And now what I'm seeing is a lot of people have now maxed out on those. So I see this firsthand sometimes before it even hits the media.
Right.
And now, just coincidentally enough, there was an article that came out. It was the Financial Post on Wednesday that said Canadians are now missing mortgage payments as credit card debt hits $113 billion. So it's like now it's down to like a slippery slope. The last inflation reading, the inflation dropped from 3.8 to 3.1. Now, in my opinion, that's a very significant drop. So I feel now we are on a slippery slope down. Be interesting to see what the next reading is going to be. And that's why I believe that the Bank of Canada is going to drop them a lot sooner than they're letting the public know.
I hope so. Based on the RBC and CIBC reports, they're saying late spring, early summer. I don't disagree with what you're saying. That it's getting to a bad spot right now where the consumer reports that are coming out on last quarter spending aren't good. I've got a number of friends and clients that are in that kind of world where they're just seeing the spending that they typically had around this Christmas time has taken a huge step back, which, kind of alludes to your point. If you don't have money and you can't make your mortgage payments, you're probably not going out and buying the new pair of jeans or the new, whatever it is that you would typically spend money on at this point in time. So, scary time. Definitely scary when people start missing mortgage payments, because that's typically the last piece to fall there over that period of time. So, kind of switching to people that are looking at mortgages a little bit. For a long time, in most of my owning a home and having a mortgage life, variable rates have been the winner. Not so much true over the last, call it 18 to 20 months or so. Are we back to a point where that strategy makes sense? Is this something that you're seeing? What are you seeing and advising your clients on when they're getting into mortgages right now?
Okay. I like this topic. I'm pro variable. I've always been variable. And during the rate hikes and up until, let's say, even the summertime, a lot of people started switching to short-term fixed rates, 1 to 2 years, because we knew that the rates are going to drop eventually. We just didn't have that timeline. Right. Every month, as new data comes out, you get a clearer picture. I'm going to use my own example. My mortgage was up for renewal in November. For the first time, I held a 2-year fixed rate because it made sense. So what I did is I held that rate for 4 months, and every month the data comes out. I ended up switching to a variable rate right on renewal because at that point we had indication that we had topped the rate hikes, and it'll only go down from here. So a little recap. Everybody, like a lot of people were switching, had that same mind frame, 1 to 2 years, 1 to 2 year rate, fixed rate. And traditionally, a lot of people lock in for the 5-year rate. So Bank of Canada, I may have mentioned this in your last podcast, actually not Bank of Canada, the big banks saw the trend that a lot of people were moving to the 1 and 2 year rates. So those 1 and 2 year rates hiked. They were actually like in the 7% range for the big banks.
Yeah.
Now the trend is, because we're near or at the top of the rates, in my opinion, and it's only going to go down from here. I have meetings with lenders and they're telling me that they're seeing an increase, about 30% of people jumping back on the variable train. That being said, I've also noticed the banks, not all, some, and maybe some it's just a matter of time before they all hop on, started decreasing the spread on the variable rates as well, as more people are jumping on this train. So, and this all happened within the last month.
Oh, wow.
So if the variable was prime minus point, let's say 4 or 5, now it's down to prime minus point 2 or 3. So they're decreasing that spread as well. Mm. And they're making up some margins for themselves.
So that they're seeing the writing on the wall there as well, that this is probably a better place to be, and that rates will be moving in that direction if they're making those moves, right?
Right. And I believe that the banks are also taking advantage of that as well by decreasing the spread for the consumer. So the trend is that people are now eyeing and looking at and locking into the variable rate.
Yeah. And anything and that's just the way to go. The move to make.
I did it.
Mm-hmm.
I did
Good.
it.
And that speaks volumes, right? And
Yeah.
that makes a lot of sense. That if that's something that you're going to be doing, it's probably the best for everybody as well. Kind of looping back to some of these clients that you're talking to that are having difficulties with either having too much debt and poor credit scores. What sort of things are you able to do with people in that situation? Obviously, it's become a bigger piece of the pie over the last little while with just people that are just struggling to make ends meet. Mortgages coming up for renewal, things like that. What kind of tools do you have in your tool belt to help these types of people?
So right now it's a very difficult time for people to refinance while the rates are high. So they're getting actually like caught on both ends. Their the credit facilities are racked up. And when I come to consolidate all these debts, because the interest rates are still high, once you stress test them and add the 2%, they're not qualifying like they were when the rates were lower.
Right.
So now what I'm seeing is a lot of people getting squeezed out or pushed out of the A banks, so the A lending space, into the B space, which is a riskier, which is riskier for the clients, right? And the economy as well. And the plan is to be temporary into the B space for, let's say, 1 or 2 years, let's say even 1 year, and then when the rates drop, let's try again on the A side, because the rates will come down and the affordability goes up. For those people who are already on the B space, I'm seeing, or the ones who can't qualify A or B, I'm seeing privates using private lending that's used as like a temporary Band-Aid to consolidate all the debts to make it affordable so that people can still stay afloat. And then once rates come down, try to refinance them back into the traditional lending space.
Wonderful.
So it's basically just like kicking the can so rates can come until rates come down. But people are
But there
trying to
are
stay
options,
afloat.
right? Is what you're saying. So there are
There are
options.
options. Oh,
Yeah.
yes, there's options.
Okay. Good. Yeah, because I think a lot of people that get in that situation just see the debt mounted and they just have a really tough time, probably even to pick up the phone and call you, right? I think a lot of people, when they get into a situation like that, they're more prone to bury their head in the sand and just not actually know that there are options out there, and it might not be perfect, but there are some temporary things while they can get back into a better spot and better rates and all
Yeah,
that.
it is better for people to know that there are options so that they don't bury their head in the sand. And by the time they reach out, it's not too late.
Right.
It's better to get ahead of the curve than it is later on, because if you're missing payments, it will affect your credit score, and then again it will affect the lending institution and where you get financed. So it's like a domino effect. The sooner that they can reach out and get some advice and options, the better.
Wonderful. Going to kind of wrap this up a little bit here. I love what you've been saying. A lot of insights, obviously a lot of expertise there. Anything that you want to leave people with? Any little last ideas or thoughts?
Let's see.
We covered a lot of ground. I get it.
Yeah. Let's see. I know one big topic. I mean, there's just so many topics to cover. But I know in our pre-discussion you wanted to discuss, is now a good time to maybe buy a house?
Right.
What do I see? People jumping in. And just some interesting stats. I work primarily, not primarily. I mean, I do a lot of mortgages for a lot of people, but I specialize in doing mortgages for business for self. So people who own their own business, who can't typically get traditional financing with the A banks, let's say, okay? And right now I see there's been a big pause in the purchasing of housing. A lot of people are on the sidelines waiting for interest rates to drop. Now,
Right.
interest rates and house prices work opposite. So interest rates go up, house prices typically drop, and vice versa. But the trend that I've noticed in the last 1 to 2 months was I received a lot of purchases. So a lot of people jumping into the markets to purchase a home now, that when rates are high, are the business for self individuals, because those are the ones who are typically risk takers.
Right.
So they're seeing the opportunity. So yes, the interest rates are a little bit high, but they'll come down in the next, let's say in the next year. So a plan would be for 1 year to, lock into a higher rate or go into a variable, and then maybe refinance into a lower rate later or switch to a lower rate. So I see these individuals taking it, see the opportunity and taking advantage of that opportunity now. Whereas a lot of other people are just waiting for rates to drop. And when the rates drop, there's going to be a frenzy of people jumping into the market. And now you're into bidding wars again. And I see a little bit of that coming back right now, because, the media or everybody suggests that we are at the top end. So, there's those people that want to see the actual rates come down before they start jumping into the market. So I believe there's a lot of pent up demand, let's say, and people are waiting. And as soon as the rates drop, they will, jump in. But I think the opportunity is actually now. It's a great opportunity.
Yeah, I mean, there was somebody that was, I think, pretty smart at one point in time, with the last name Rothschild, who said, "When everyone is selling, it's time to buy." So, he ended up building quite an empire. So, it definitely makes sense that these pains are very short term. Even though that these rate hikes have felt like they've been going on forever, I feel like I've been talking about it for my entire career at this point, but it's really only been the last 18 to 20 months, right, since March of last year. So that is a temporary thing. We've had low interest rates for a long time. We're going to go back to lower interest rates, whatever that means going forward. So I think you're right. This is probably the time to take a little bit of short term pain to buy some places at a bit of a deal. Take on that little bit of added risk. Calculated added risk, but probably a little bit of added risk right now when the long term is going to be pretty good. So some great words of wisdom there, Tanya. Really appreciate it.
Thank you.
And I definitely appreciate you taking the time this morning. I know you've got a busy Friday here, so I'll let you get back to that. Really appreciate it, and look forward to our chats again before too long.
Okay. Happy Friday. Enjoy your
Happy Friday.
weekend.
You too. Bye bye.
Okay. Bye bye.